When was the last time you did something for the first time? You remember that feeling of hesitation. Maybe you're not ready. Perhaps you're not good enough. You doubt yourself. It's a long road ahead. And right now you think safe is a good place to be. You take a step back, but in doing so, you see the whole picture. You remember the stakes you were brave enough to take. So you shout at the unknown no longer, because you are your own master. You rise up because you know you're not alone. Because you stand on the shoulders of the ones before you. And through them you realize you are more afraid of not trying than failing. They hold your hand, lead you to the peak of your potential. And once on top, you take the leap and do it. The first time you flew and tasted freedom. The first time you went the extra mile and never looked back. The first time you understood that something so small could change the course of your future. The first time you put yourself first. At First Metro Asset, we value you and your achievements. As we navigate through this better normal together, we are here to help you cherish your firsts and make those moments last.
Hi, good afternoon. Thank you so much for being here. 121 people in the Zoom call. I am very blessed and touched by your presence. In the chat box, I saw a very good message, a very touching message from one of my anak-anakan, also an OFW who lives in Italy. Hi, Aris. And Jel is, I think, also, and I'm not sure if you're an OFW. And there's Alberto who said hello from Jeddah. I am very grateful and honored to be your speaker this afternoon. I will only have 1 hour of your time. And I consider that something sacred. And I hope that you have the capability to listen carefully because in 1 hour, we'll be talking about some stuff that are critical and very important in our lives. So welcome again, everybody, to this FAMI webinar. I am Salve Duplito, a registered financial planner and finance journalist. And we are going to talk about a quick, I said 1 hour, guide to a happy retirement. Sorry, I have candy because I'm coughing and I don't want to cough on everyone. Yay. So, but before before we begin, I'd first like to greet all the teachers out there a happy Teachers' Day. You know, it's important to remember our dear teachers. Do you remember the first teacher that made a big impact in your life? Do you still remember their name? Can you type in the chat box while I say hello to James? Jameson, magandang buhay from Moscow. Hello, watching from Doha, Dino said. And yes, Aris is Aris and I don't know each other personally, but he's such a great fan of financial education. So everywhere I go, he's there. Well, if you don't remember the names of your teachers, maybe we should try to think again about the kind of influence that they have in our lives. My teachers were able to instill in me so many things that from that time I met them in elementary and high school, those values are still with me today. In fact, one of them actually was very instrumental in my career in financial education. They have a very crucial role in strengthening communities and nation building. And that's why FAMI, bless your heart, has decided to use this webinar to commemorate their noble profession. So this episode is dedicated to teachers. And I know for a fact that each one of you, you're also teachers in your own right, whether it's because you're parents or you're mentoring people in your company or in your business. Teachers play a role in everybody's bright future. So you also need to have a comfortable retirement in, whether it's in the near future or far back into the future. Now, um, because of all of this talk about retirement, I think it's very important to talk about two great products. One great product that I am also using and preparing for my own retirement. And so let's watch this video.
What are mutual funds? A mutual fund is a pool of money put in by different investors that is professionally managed and invested in specific types of securities like cash, stocks, and bonds. Through a mutual fund, you can have access to many investment options. And you don't need much to start investing. With as little as 5,000 pesos, you can start investing in mutual funds. And because you can buy mutual fund shares every banking day, you can add to your investment as often as you want for as low as 1,000 pesos. Mutual funds are also liquid, which means you can withdraw your investment anytime you need it with no exit fees after 6 months. Investing in mutual funds also partners you with a fund manager who keeps track of market performance and makes well-informed decisions to take care of your hard-earned investments. Choosing the right mutual fund and fund manager is the key to fulfilling your financial goals. For more information, visit the FAMI website.
What FAMI Mutual Fund is right for you? The right FAMI Mutual Fund for you depends on your risk profile. If you are a conservative investor, you should invest in the Save and Learn Money Market Fund or Save and Learn Fixed Income Fund. The Save and Learn Money Market Fund seeks stable returns by investing in fixed income securities, which include bank time deposits and short-term government securities, all with a combined average maturity of 1 year or less only. This means the fund is for short-term investing. Save and Learn Fixed Income Fund invests in Philippine government, local corporate debt securities, and bank deposits. Normally, the combined average maturity of the securities is 3 to 5 years. The fund is intended for those that can stay invested in the fund for at least 3 to 5 years as well. Save and Learn Dollar Bond Fund invests in dollar-denominated and corporate debt securities, as well as bank deposits. It is also a fund of funds where it may invest in global funds, taking advantage of global opportunities and offering access to international funds. Save and Learn Balance Fund aims to grow your capital from interest and dividend income, as well as market value appreciation from both equity and fixed income securities. The fund can invest up to a maximum of 65% of its assets in equities. Now, if you are an aggressive investor, you can choose any of the following mutual funds. First is the Save and Learn Focus Dynamic Fund. This fund has no limit as to how much it can invest in either equities or fixed income. It may invest all its assets entirely in either the equity or fixed income market, or a combination of both depending on market conditions. This fund takes advantage of asset allocation in addition to stock picks, and fixed income credit and duration to generate returns. Second, the Save and Learn Philippine Index Fund. The fund is an equity fund and only invests names included in the Philippine Stock Exchange Index. Third, the Save and Learn Equity Fund invests in mostly large capital index names. Each investment goes through thorough research and detailed analysis, using the FAMI investment objective of generating stable returns with moderate risk. Fourth, First Metro Consumer Fund. This fund invests in publicly listed Philippine consumer companies. FAMI believes that consumer companies will have strong contribution to the growth of the Philippine economy now and in the future. And fifth is the First Metro Exchange Traded Fund. The FME ETF is the first and only local ETF in the country. It is a pooled fund publicly listed on the stock market and tracks the PSEI.
All right. Thank you, everyone. I hope you had a great time watching those videos. I also had a great time reading your messages in the chat box. I saw Dino said, "You made my heart lurch naman. We missed ANC's On the Money." There are still replays going on, and you can still watch some of them on YouTube, I think. And there is still the ANC On the Money Facebook page. But you know what? Maybe very soon, because you said you missed us. We might be back. All right. And thank you so much, Aries. Aries said, mutual understanding lang daw alam niya sa mutual fund. O, di ba? Aries is always making me laugh all the time. And Ronald Resha said, Salvenatics, I have to say hello to the Salvenatics here. There are some questions. Please go back, people said, about On the Money. And there are some questions. We will get to your questions later on. But before that, let me share with you my message for today, okay? Is that okay with everybody? Such a great turnout, 211 on Zoom right now. I think other people are watching online too via the FAMI official Facebook page and the Salve Says official Facebook page. We're also streaming there, right? Okay, so let's go to our main discussion today. So if I may share my screen, give me a moment. As you know, it takes a couple of seconds to really start this. And there you go. Can you see my screen? I would like to see my screen and see the chat box at all the time, because I like really reading all of your thoughts there in the chat box. So don't be shy, okay? I am going to read the best comments there in the comment section. So we're going to talk about investing early and making sure that that allows us to retire comfortably. This is not always a reality for everybody, but for some of us who are blessed enough to have good cash flow and an opportunity to learn about investing early on in our lives, that's such a great blessing. And I told you before that one of the reasons why we are doing this in October is because we are honoring our great teachers. Some of you may already know. That's my mom in the middle. I super love her. She's already, oh yeah, I miss On the Money too, said Domingo. So my mom, this was taken a couple of years ago. My mom used to be a public school teacher. And I remember she would always bring me to this school where she served in Kamalig Albay. So any Bicolanos out here in Zoom, I remember that when there are no classes in my school in Bicol University, I went there when I was little. She'd bring me to her own school, and the things that the dances that I would learn in my own school, I'd share with her students. And I really saw how much of her heart she gave to her craft. I saw that even when we had no food in our house, every time she saw a child going to school hungry, she'd always feed them. And these are the kinds of heroes that we have in our lives today for the children that go to public schools all over the country. They really are noble. Of course, they're not perfect. They have, shall we say, they sometimes make wrong financial decisions in terms of investing. There are a lot of scammers targeting teachers. And this is why one of the work that I do as president and founder of Empower and Transform and ANC host and anchor and Panalo Teleradyo Servicio Anchor is to provide financial education to our public school teachers. My sisters, two of them, were actually also public school teachers. Oh, Lisa said, my parents are both teachers. See, they make a difference in our life, but even so much more, I believe, outside of the walls of our own homes because they matter to so many children. And my father was a principal in the same school where my mother taught. I think that's where they fell in love with each other. So, because of all of these experience I had with the public school system and how very important it is to empower the teachers and the students and the parents of public school students, my company called Empower and Transform asked told the Department of Education I think this was during an On the Money episode where the Secretary of Department of Education was in this episode. She asked me personally, Salve, can you help? So we came up with a proposal and the Ipon Ambassadors Program was born. And what this does really is we said we could adopt one public school teacher per region in the country. We want to start small, and we will provide them with premium one-on-one financial coaching for 12 months. Yes, one whole year. We hold 2 sessions every month. So these are Zoom meetings every other week. And we teach them everything they need to know, from proper goal setting to prioritization through timeline, creating their own SALN, debt management. Very important is the building of emergency funds, and critical, of course, there are other things, right? Preparing for the kids' college education, but most critically, we want them to be able to retire comfortably, the way we're going to talk here now in this session. Yes, vision board is a must. We do that for each of the public school teachers. And you know what? Once they stick to the program, because it's not always true that, every person can stick to a very rigorous, difficult program. But once they stick to it, my company and our partners, like the Rotary Club of San Juan Supreme, which is my club, and AXA Philippines, which is part of the group of companies where FAMI is, they provide a 50,000 peso cash grant to each of the teachers so that they can, one, pay down some of their debts, make sure that they are able to pay that down so that they can continue investing for the future, right? And number two, possibly start a small business on the side so that they can increase their income and be able to push towards their goal of retirement. Thank you, Domingo. My heart goes out to all teachers. More power. Thank you so much. So this is one of the teachers who are enrolled in our program. He's like, I hope the other teachers aren't here because I'd call him my valedictorian. This is Danilo R. Aquino III. He lives in the South, and there's a message that he would like to share with
Magandang
everyone.
umaga po. Ako nga po pala si Danilo R. Aquino III at ako po ay isang guro ng contemporary arts na subject. Nagtuturo dito po sa Mindanao at ako po ay nagpapasalamat sapagkat nagkaroon po tayo ng mentoring program. Saan po ay natutunan ko po kung paano po yung tamang paggamit ng ating mga resources. Natutunan ko din po kung ano po yung kahalagahan ng pagkakaroon ng insurance. Natutunan ko din po yung kahalagahan ng pagkakaroon po ng ipon, paglilista, yung pong pagkakaroon ng retirement fund, hospitalization fund, at saka makapagbayad po ng aking mga kompromiso po. Yun po yung aking mga utang. Papasalamat po ako sa DepEd sa kanilang ginawang ganitong programa, lalong-lalo na po sa bumubuo po ng Empower and Transform at saka doon na rin po sa Rotary Club po ng San Juan Supreme. Maraming salamat po. Hindi ko po kayo maisa-isa. Lahat po ng aking mga coach at lahat po ng tao na bumubuo po ng programang ito. Dahil po sa inyo, natutunan ko po kung paano lumaban muli at kumayod muli para po sa pamilya at para din po sa mga pangarap. Maraming salamat.
Ayan. You know, every time we have a session with Sir Danny, sometimes it becomes a really emotional session. And I realized as he was speaking that part of the prospect of being able to retire comfortably is to be able to give back to the community. You know, when we prepare early, there is space in our lives to help out other people like Sir Danny. For example, right now, one of his children is in the hospital, and he sent Ralph, our project manager, a message. She said, "This is why I now believe in what what teacher Salve is also saying, that it's very important to save. It's important to create an emergency fund because anything can happen. And when you are prepared, then it's easier to deal with all of the difficult aspects that life, sometimes life throws you so many unexpected things. But when financial education really empowers and transforms lives, especially when they're coupled with action and sustained behavior modification. We teach people to move from knowing to doing, because all of this information that, for example, each one of you will receive today, you will receive a lot of information today. Some numbers, we're going to do hardcore number crunching. But if we fail to act immediately afterwards, this is going to be a waste of your time. And I don't want to waste my time. I don't want to waste your time. So what you know after this session, plan to do them afterwards. There's so many different ways to adopt the things that you're going to learn here today. But do yourself the honor your own time by acting on just one thing, even if it's just one thing that you learned today. Thank you very much. Arvin is asking, magkano nga ba ang sweldo ng isang public school teacher? You know, in reality, nominally, the salary that they get are a little higher than the private school teacher. That's what we hear in the news. But there are so many deductions, and many of them get buried in debt early on in their careers, because in government, sometimes it takes you 6 months before you get your first salary. So when they enter the public school system, they start borrowing first because the salary comes after 6 months. Something has got to be done about that. I am sure the Department of Education is doing something about it, because as we said early on, our teachers deserve a life of joy where their cups are filled by their career and helping other children achieve their fullest potential. So let's move on. Let me ask each one of you, do you know how much your monthly budget is? It's so weird that not a lot of people actually know how much they spend every month or where their income goes. Yes, okay, can you type in the chat box? Maybe, I don't know if you're comfortable with it, but we tried to do a little bit of a numbers exercise, and very good. You guys have a budget tracker. A lot of you are very advanced here. Let me talk about, for those who are still in the beginning of creating their own financial goals, financial plan, financial system, it's very important that we understand how much we are making and how much we are spending. Because if we're going to plan for retirement, we won't know how much we can set aside for the future if we don't exactly know our cash flow at the moment. Yes, very good. Every peso that comes in and goes out must have a name. Right. So let's say this is for let me know if this is too much or too little for an ordinary single guy here in the Philippines living in Metro Manila, maybe around 35 years old. This guy could be spending 35,000 for food a month, including all of the soap, etc. Okay. And then for utilities, water, electricity, 10,000 pesos. Maybe for rent, a condo unit at 30,000. Guy or girl, okay? Transportation, especially if they have a car, could be spent on gas, toll fees, parking, 7,000. Is this too much, guys? Too big? Yes, Makati BGC, correct. O mayaman daw yung guy or girl. Subscriptions, phone bill, internet, music, 8,000. Maybe fun money of 8,000, 2,000 pesos per week. Too high, too low. And maybe a miscellaneous of 2,000 pesos. Just for, some stuff we can't really account for every single month. I think the miscellaneous is low. And maybe he has a 100,000 budget every single month. All right. Too high, too low, too high. Some people live this way. Okay. Sana all. Everybody's saying. If you're living overseas, is this too high, too low? I would like to know. Senior soft developer. Yes. Around that level. And do you think that those people who earn this much and spend this much, do you think that they're saving money or investing for the future? Do you think that they'd have the presence of mind to think about the fact that they won't make this much money all the time in your life? YOLO mindset? Some people are saying no. Maybe some of you who are quiet would say yes. Okay, so you're saying YOLO. Now, when you're planning for your future, you will not spend the same amount every month that you're spending now, because your expenses will go down a bit, because usually, well, you don't have to go to the office. So the gas, the outfits, it will be very different. The only difference is also, however, is that you'll have to spend more money on medication. All of the maintenance meds that you're gonna start to take. Who's beyond 50 at the moment? Can you raise your hands? Are you courageous enough to admit how old you are? So we're now just talking about current cost. Okay, we'll talk about inflation in a bit. So, how much will it cost to be you when you retire? Let's see, sample computation. Are you ready? So if your monthly budget now is 100, somebody's already 60, and your current age is 40, let's say 40 years old, and your estimated life expectancy is 85, okay? Can you raise your hands if you feel like you're the one in this slide? And your inflation assumption is 4%. At the moment, our inflation is a little bit on the high side, but that's not the regular average, the long-term average of the Philippines. Usually it says 3 to 4%, but we're going to use the 4% number because a lot of you're not consuming the same kinds of products that are in the consumer price index reported by the government, right? We buy stuff that are a lot more expensive than the ones that are in the CPI basket. So let's use the 4% inflation rate. And let's say that if we inflate the 100,000 monthly budget for when you retire at 60, it will be 109.5 million pesos. Why is that? Can somebody explain in the chat box? What does inflation do? Why is retirement so expensive? Are the agents just giving me this high number so that I'll have to buy more in investments? That's always something that I hear from a lot of people, right? So that's right, Rocky. It decreases your buying power. Even if you have the same amount of money, you can't buy the same amount of goods and services with that because inflation actually kills your buying power. Thank you so much for that answer. So, question. I want you to answer this for me. Can your SSS or your GSIS even retirement pay cover for your 109.5 million? Okay, very quick answer, Rocky. No. Grabe ka, Annalyn. She said, baka wala ng SSS by that time. I will show you later an SSS table. That's why it's so important. And I think I see in the chat box and a lot of you are listening out there, I think that's the reason why you're here in the Zoom call at the moment. Because we know, we know that our retirement pay from SSS or GSIS will never ever be enough. Okay, the calculation, Arvin, of the 109.5 is you multiply the 100,000 per month by 12 so that you get the annual need, and then you inflate that using 4% as inflation rate, and then you add everything from age 60 to 85. That's your retirement need. Huh? Okay. So, of course, your SSS retirement pay won't cover that because this is, ladies and gentlemen, the retirement table. You will only get, I think, around 30,000 if you're really maxing out and your let me say, you're maxing out and your employer is also maxing out everything. I won't read your comment, Jameson. I think the other people can read that from the chat box also. Okay, so let's say, Miss Salve, the 109 is too much. I don't think I can save up that much. So let's try to figure out what will happen if we start saving earlier, right? So let's say at 40, or I don't know, if at 40 years old, let's say your parents gave you a condominium or you bought yourself already something, an asset here or there, and it's 2 million, right? Let's assume that. I think that's okay, right? That's a very common thing to have around 2 million assets. Let's say that's already a combination of your savings in the bank or a little investment in a property somewhere, right? And let's say you have a retirement factor. You've been employed for 20 years and your company will pay you one times of 1 month's salary time multiplied by the number of years you've been with the company. So the company will be giving you a little bit of a retirement fund. And let's say that you're saving already, but you're increasing your savings by 5% every year. And let's just put it in a regular bond that pays you 6%, or maybe divide your savings among all of the digital banks that give you 6%, right? And at 50 and older, you'll be a little bit more conservative and put that in a 4% savings instrument. But let's also say that you might be earning a little bit from consultancy. Okay, so you won't be lazy all the time. You earned a lot in your between your ears. You've learned a lot, and you would like to continue working a little bit. So let's say 125,000 pesos per month. How much do you need to save at 4% compounding return? The numbers show that if you start at this age, at 40, you need to save 24,000 a month to be able to retire well. Let me see in the chat box. Is it high? Is it low? Is this something that you can do? Okay lang, okay lang for Aries. Arleno said, blessed day for each of us. Wow, thank you. I believe that this webinar will surely benefit all those who are truly open-minded. Okay, thank you. Normal, doable. Sheila said too high. Annalyn said, I can save higher. Good job. Arvin said doable. High for average people. So you need to increase your income. It's quite high, said Janet. Thank you for your answers. Too high. Thank you, Feng Yang. It's very interesting. Now, let me show you what happens if you try to save maybe 10 years before. Okay? So if your monthly budget now is 100,000, your current age is 30. Let's compute again how much they will need for retirement. Your life expectancy is 85. You might live longer or you might pass away earlier, but let's say for just so we will be able to compute. Bobby, I don't understand that question. Incentive for this study, I really don't get it. Your inflation assumption is 4%, let's say, right? And your estimated retirement need at age 60. Okay, so if your current age is 30, your budget is 100,000 every month, you think you will live up to 85 and inflation is at 4%. Your estimated retirement need will be higher or lower than 109? What do you think? Bobby, this is not a study. I don't understand. So Ari said, is it lower? You're now 30, right? Retirement will not be 60. So you will have 30 years. The actual nominal number, not the savings number, the actual nominal number, lower contribution, but how much will you need? Now, because you have a longer period, the retirement need will be bigger. But, and of course, your SSS or GSIS will not be able to cover it. But you are right. I think you're saying lower. Your contribution for your retirement will be a lot lower. So let's see by how much. Can you guess? Maybe I would love to see if people can guess. How much lower can it get if you start saving or investing 10 years prior to turning 40? So again, if your initial investment is 2 million, your retirement factor is 1 time, same as before. Now your years of current service is 10 because you're only 30 years old. And it's the same thing, 5% growth in contributions, and your assumed returns is very conservative, 8%, 6%, and 4%. So it goes down as you age, right? Because you're much more conservative when you age. And let's say your earnings is 133,000. How much do you need to save? Earlier we said 24,000 per month. That's 12,000 per payday. This time, if you saved 10 years before, your monthly contribution will now be only around 7,000 per month. So what does this show, ladies and gentlemen? We have the same number, but it will be a lot lower. And this only works, however, if you maximize the power of compounding returns. If we don't take our earnings out and allow and reinvest our earnings and allow the earnings to grow, then you will be able to inject your retirement portfolio with the magical power of compounding. Now, let me say, the market does not always go up. In the last 10, I don't know, a little bit more than 10 years, our local market has not produced as much return as the 10 years prior to that, right? Everybody who's experienced in the market understand this. They know this. This has happened. And I started investing way back when I was in my 20s. So that's 30 years ago, right? And I saw a huge jump in my earnings because I started really early. But in the last 10 years, those earnings were pared down. But if I look at where I started, that's still, the market was lower compared to where it is now. So when you're looking at a chart, you have to zoom out to understand the perspective. But if you started just 10 years ago, you're probably now disappointed. But what is the perspective here? When we're investing for our retirement, are we just looking for 10-year return? When you're 20 years old, when are you going to retire? In 40 years. When you're 30, when are you going to retire? In 30 years, right? So when you're investing with a long-term time horizon, it's much easier for you to generate the returns that can help you. The Salvenatics here, niloloko nyo na ako ha. 28 lang daw ako. Kinilig naman. Yes. So let's say instead of 30, you start investing right as soon as you start working. This is our advocacy, really. Letting the 20-year-olds appreciate the huge benefit of setting aside some, not even all of their earnings, but a little bit, just a pinch of their earnings and investing that for retirement in the long haul. Okay. Yes. So let's see. Who in this Zoom room? Come on, show me who in this Zoom room is in their 20s. Can I see? Can I see a show of hands? I will wait. I will wait if you're in your 20s. I would like to see if there are people here who are in their 20s. Aries, don't me. 10 years ago, you were in your... Sorry. Let me cough. Ellie, is that are you raising your hands or are you saying, sana all? Oh, Marjorie! Hello! Oh my gosh. Yes, sorry, naubo po ako. Thank you so much for watching. Jelly is 22. Yes, hello. I think maybe not just 20-year-old 15 years ago. Okay, so I want to show you, Marjorie, I hope that your daughter is looking at this. Earlier, we said 24,000 per month, and then we said, I forgot the other. So if you're in your 20s now, and your life expectancy, the same thing, 85, inflation assumption is 4, but your estimated retirement need will be so much bigger because inflation will be used to inflate that number a longer period of time compared to someone who is in their 40s, correct? And your SSS will not be able to cover it. Let's see if you're in. Now at 20, you don't have any initial investment. Let's say you had nothing. Nobody gave you anything. You haven't saved yet. Your retirement factor is 1, but your years of current service is also 1. So nothing much for now from the company that you're working for. But you're determined to grow your contribution at 5%, right? And let's say very conservative. Let's say at age 30, we just want the 4% because we're still studying the market. We're still not sure, right? Although in reality, the younger ones, they really want the big return. And then at 30 to 39, you're a bit more comfortable. So you say, I'm going to target an 8% return. At 40 to 49, you're tapering down because you don't want too much risk. And at 50, it's now at 4%. Your earnings could be around 133,000 per month. How much do you need to save now? Can you guys guess how much? I don't also see my... Oh, okay. How much now? This is a monthly figure, okay? This is going to be a monthly figure. And you can see that if you start early, the amount of money that you will have to set aside shrinks. It gets very expensive when you start really late. But when you start early, it's just 5,100 pesos per month savings if these investment assumptions are achieved, right? What do you think of all of these numbers? Can I see in the chat box? There are some questions. We'll go back to these questions. Bernadette said, mutual funds invested mainly in stocks. I will explain that later. How to start, how much? Very educated questions. I am very impressed. In reality, we started investing in our late 20s, but because of current crisis, we cannot achieve the 8% return rate during our 30s. How can we supplement that? Very good question. Saan talaga nagsimula ako earlier? Yes. I started in my 20s, not super consistent because I was a young mom. And you know, when when I was in my 20s, my salary was 5,000 pesos. Edsel Mendoza, I am going to read what you said. Now I conclude that time is a great ally of money. The earlier you start, the better. And the power of exponential growth is great if we start younger and in the long term. Thank you so much. That is so beautiful. Okay, so let's talk about the rule of 72. I know you guys know this. Very quick, like a heuristic even, when you're trying to figure out how much time do I need to double my investments. Guys, if you know the rule of 72, can you raise your hands? Can I see? So let's say your rate of return is just now at 6% because that's what some of the digital banks are giving. So can you do the math? 72 divided by 6. How much? Are you using your calculators? So this is a very quick way to find out how much return you should target. So thank you. I will share this to my daughter. You know, ma'am, way back in our early years, nothing shared this. Yes, that is true. That's why we're so very blessed that FAMI tries to do this. I know that FAMI is also teaching a lot of different schools the basics of investing, the basics of understanding how to prepare early for retirement. So the answer is 12 years, right? 12 years with a 6% return. You know what? When you know and understand how compounding works, you will realize that the human brain is not equipped to appreciate exactly how powerful it is. But the negative side of compounding now is inflation. Inflation also works with the rule of 72, right? So how does it work? If inflation is at 4%, you divide 72 divided by 4. And how much is that? 72 divided by 4, 18 years, correct? That means in 18 years, the 5 million you save will only have the value of 2.5 million. That's crazy, right? With inflation currently at 4%, we lose the value of half of our savings in 18 years. If it goes up, if it stays elevated for a long time, that 18 years is a lot shorter. So this is why it is very important for us not just to save our money, but to find ways to invest it in the right instruments with lower management fees so that we're able to maximize the power of compounding. Now, we talked about the monthly allowance. What if we get sick? What if we want to travel? Everybody wants to travel. What if you want to leave something for your children? And what if you want to help others, like build that private school for the blind or something like that? These are costs that will greatly increase what you will need at retirement, even though they're the things that actually give us fulfillment, right? So again, this is the basis for our thesis that the earlier we start, the better. Ronald Tan said investing in bonds is just enough to fight inflation. Well, there was a time that bonds gave you 7 to 8%. So that's a little higher than the inflation rate. So, you know, when we have financial education trainings, we also include how to maximize the offerings in the market to be able to do that. So the question I think most of you are asking, or some maybe, is it ever too late to begin? Let me tell you the story of my, not childhood naman. So she's a very good friend who also I think is an investor in FAMI. So I don't know if she's here. This has been public because when we were young, around in our late 20s, she called me. She had a very good career. She was single. She was taking care of her parents at the time. And she said, Be, I really can't save. Even if you constantly write about this in the Philippine Daily Inquirer, she's been reading all my articles in the business world. She said, whatever I do, I just can't save. And at the time, we were in our late 20s, so we started talking about how to, the system, the ecosystem that she needed to create so that despite the intensity of her shopping trips and all of those things, she's able to save because out of sight, out of mind. So I said, don't worry. The human brain is really not predisposed to saving because saving is painful. And everything that's painful, we try to avoid it. I think many of you who are here, you're already evolved beyond the human sphere because some of you, I know you love to save, right? But the ordinary human being, we're not predisposed to saving. So, thank you, Jameson. Hindi pa late kaya yan. And you know, Anna now, who is the same age as mine, has a great portfolio of stocks, bonds, real estate, several other investments. She has investments in jewelry, etc. So, what is the story about? In the beginning, it is hard because the lessons, same with Warren Buffett. Sorry, I forgot to edit the T. It should be double T. Lessons from Warren Buffett. It's called the snowball effect. Warren Buffett used at some point in his life was the world's richest person, right? But even he earned his first billion when he was 60. So he said it's just in the beginning that it's hard because you're slowly trying to build your base. But once the base is big enough, the earnings get a lot bigger, and the earnings that get included back into the base, and then it goes again and again. It loops. And that's how, when you reach that certain base, things go faster onwards. So yes, correct. Hindi pa late. Simple lang, sapat na. So, you start small, you stay consistent, and you keep reinvesting your returns. I always keep reminding people, it's not how much money you make, it's how much money you keep. So those of you who say 100,000 a month is too big, even if you're making 50,000 a month, you can save more money than the guy who's making 100. Because if the guy who's making 100 is saving only 1,000 pesos, but you at 50, you're saving 5,000 pesos, who do you think will have a bigger retirement in the future? So thank you everybody for listening to me. I know that we've run out of time. We will still give you time for the Q&A. But let me just share with you a small quote from the financial beshi ng bayan. If you're determined to be uninspired, you just wake up every single day saying, I hate my job, I'm not making enough, the government is not helping me, I will just die early. Not even the most powerful lightning can fire you up. But when you're determined, I have seen this in my life. The teachers that I have worked with, if you really think about it, their salaries maybe 25,000, 30,000, and they have to feed a family of 6. Let's say there are 2 of them making money. Maybe the other person is making 20, maybe 50,000 for a family of 6. And then somebody gets sick. And yet they give so much more. And I have seen a growing number of public school teachers who are able to save and invest for the future. The future, ladies and gentlemen, is that all of us are able to at least know how much we're making, how much we're spending, commit to ourselves how much we can set aside for the future, and hopefully live simply so that some part of our money we're able to use to give back to others. So thank you, everybody. Let me invite you to my socials. If you would like to reach out, you can go to Facebook, Instagram, TikTok, Twitter, and YouTube. It's all Salvices, and we have a Money University by Salvices on Facebook. This is a group that's slowly growing. It's really grown so fast. Some of you I've seen there. Thank you so much for joining us here. This Money University is a group where people have safe space to ask their questions, to do surveys, to share what they learned, and to make sense of what is happening in the world out there. Thank you so much, everybody. Thank you so much for being here. This is all I have for you today. I hope you will join me again. I think there is going to be another one. And please stay safe and always be inspired. Always be inspired. Thank you. There you go. I think we will have some time to do a Q&A, right? That is it. After that quick and easy retirement guide, let's do a question and answer portion for everyone. Okay, Aris left. I thought it was already the end. Okay, the questions that we have for everyone. Let's see. I think I would like to answer some of them very quickly. Saan po ba maganda mag-invest? Florabel Pajarillo said, where is it safe to invest? Okay. So the first things that we need to consider when you're thinking about where to invest is to understand first what the options are out there for us. Because what may be good for me may not be good for you. You have to consider your risk appetite, the time that you have to study your investment, and the accessibility of your investment, your time horizon, that's also very different for each one of us. So the portfolio that you will have will be very different from mine. But there are the usual options that you can have, right? I always talk about the investment universe, right? There are many different kinds, and you have to make sure that you've paid your consumer debt first, that you have an emergency fund, very important. Do not invest without an emergency fund. Then you start from the very bottom of the risk reward spectrum. You start with time deposits. Some time deposits now are giving 6% for a minimum of 5 million pesos. There's Pag-ibig MP2, and then there are mutual funds, unit investment trust funds, corporate bonds, and government bonds. There are money market and fixed income instruments. There are real estate investment trust funds, stocks. Sorry. So those are your different options, right? What do you think about VULs? Would it be better to create your own insurance budget or just get a term insurance? For a lot of people who will not have time or do not have the capability to understand, sometimes VULs help you because of the agent who makes sure that you don't miss out. But if you are here and you really want to study and learn, I think you can make better returns with other investment instruments. Yes, there are a lot of stuff on Reddit now. I know that a lot of people are angry with VULs now because in the past 10 years, the returns have not been okay, and you've been paying a lot in terms of fees. That's why the insurance sector now is turning back into the traditional life insurance policy types, right? For me personally, it's much better for me to separate your life insurance instruments, your protection, and your investments. This way, it's more flexible, and you're able to maximize the power of the markets. Other questions? Let me check. Why shouldn't I just invest in stocks myself? Okay. Very nice question. There are different kinds of investors. Some investors should be defensive only, meaning because the business of your life, you should just invest either in an index fund or a mutual fund that you're happy with. This way, it's like you are hiring a financial advisor to invest for you, but make sure that you're not spending too much in management fees, right? A lot of people actually fall in this category, but sometimes we have pride, and then we think that I can beat the market. Okay, you go directly to the stock market. You think that you can beat the market, but not a lot of people do. So it depends on who you are, and depends on your analysis of your investment capability and also your capital, because investing in the stock market directly can require a bigger amount of capital. So diversification is also a problem, because when you invest in the stock market, a one stock portfolio is the riskiest thing that you can get into. But you invest 10,000 pesos in an index fund and you're instantly diversified, your risk levels go down, right? So that's a better way of maximizing your money, unless you have the size, you have the ability to understand the stock market, you have time in watching it closely, you can read annual reports and analyze them. Some people can and do make money in the stock market, except now the market's really low. So they're investing for the long term. Other questions? Things are getting so expensive. How does this affect the way I manage my money? Prices of things like fuel and rice. Do you also feel that? What is the effect of inflation on my investing capability? I think we talked about this earlier, no? How inflation is really reducing our capacity to buy the stuff that we need. So that also means that you should, that's your hurdle rate now. So if inflation is at 5%, you have to make sure that you're making more than 5%, or else you're just protecting your buying power and not really making money. So even if you're making 4%, if inflation is at 5, you're losing money real time. More questions? A lot of questions I can see. Thank you very much for those of you who are still here. Bernadette said, can I still get the benefit of compounding interest if I invest in mutual funds invested mainly in stocks? Okay, it's your benefit from the power of compounding is inherent in the stock market. This is my personal opinion, right? Companies should be able to use even just your every 10,000. Let's say 10,000 is your unit of value. Every 10,000 that you put in a good company will be able to use that 10,000 to create better value. And when they make money and reinvest that money into the company and create better value, you're already benefiting from the power of compounding from that 10,000 you put in a company, right? But because you're investing not actually as a major investor in a listed company, but in the security that comes out of that value creation in either in the stock market or in mutual funds. Some people say if you sell and you make money from your sale compared to your original capital, and you reinvest your earnings back into the market, that's how you can benefit from the power of compounding. So many different ways, in my opinion, of benefiting from the power of compounding. What I really love, however, is that equities have the power, because of the great power of corporations, of creating value in corporations, but only if you invest in good companies that are able to govern properly, make sense of the market, understand how they can create value. That's when you maximize the power of compounding completely. Alfredo Macapinlak, companies do not have access to the money in the stock market. Listed companies? I do not understand. Is buying condos or properties today considered an investment, especially during pre-selling? Only if you are going to sell them or if you're going to lease them out. If you're going to live in them, that's not an investment because you won't make money living in your own property. Which is better to invest, UITF or mutual funds? They're basically cousins, right? Very identical cousins, in fact. The only difference between UITFs or mutual funds is the nature of the company that's selling them. UITFs can only be bought within banks. They're called unit investment trust funds. You can find them in universal banks, while mutual funds are sold by investment companies. So that's the only difference. Not sure anymore about the taxation. I think we can tackle that in the future. Stock market roller coaster of emotions. Be prepared. Do not succumb to your feelings. Correct. I totally agree. That's why it takes a lot more skill to be able to navigate the stock market as opposed to somebody who's just investing in an index fund. You just let your fund manager do the work for you. That's why you're paying management fees. What is your comment on Pera? So many questions. I love it. Okay, Pera is a great tool. I was already covering the financial markets when it was being conceptualized, right? It took a long time before Pera was offered to the market. I think the tax benefit is great because when it's long term, you can now use the money that you're supposed to pay in tax will be used to add to the compounding benefit of your portfolio. My only problem with Pera is that it's too small. It's been raised to 200,000, I think, for locals, 400,000 for overseas Filipinos, but I think it's not enough. They have to increase it. What else? Aside from stocks or UITFs, would cooperatives be a good place to put money in? Some offer 10% return tax-free. Yes, but make sure that you do your due diligence. Not all cooperatives are created equal. So make sure that they're very transparent. It's easy to get their financial statements. There is exit mechanism and there is track record, the governance. It's the same way as you do due diligence on your stock, on your listed companies. Yes, time to invest your money, trend to go down. It's already low now at the moment. If you have to choose between insurance or investment first, which one should you go first and what are the considerations? Husband on your 30s who want to begin this journey. Thank you for this question. Very good question. Risk management first before investments. Make sure that you have medical insurance. Medical insurance because with our lifestyle now and the kind of food that we eat and the genetics, diba? We have no control over expenses in the hospital. I have seen a lot of families whose savings have been decimated when somebody in the family has to be treated and the treatment goes beyond ₱1,000,000. So get your HMO, get your medical insurance. And if you have young kids, get the cheapest form of life insurance that you can find and then start to invest very quickly. Because all of those actually are necessities anyway. I haven't looked at the Q&A box. Yay! Do I have time? May I ask FAMI if I have time to answer there are a lot of questions in the Q&A box. Bernadette said, thank you. Can you explain further regarding selling an aggressive fund when you've already gained and reinvesting on a more conservative invest? It depends on the numbers. In my personal opinion, if especially if your investment horizon and your investment objectives have changed, it's okay to sell an aggressive fund, lalo na if you want to go conservative. So if you've made money on that, sell it and then invest in something else, but reinvest everything, including your earnings, so that you maximize the power of compounding. How can we reach you? Wait, hang on. Let me go through the Q&A box so that we're able to answer everybody. Very, very quickly, would investing in dividend stocks enough to get a passive income to live comfortably during retirement? Not enough. The ups and downs of the market also affects dividend payments. So you have to have a diversified portfolio that has different asset classes, may include properties, may include different kinds of stocks, may include mutual funds, index funds, ETFs, and all of those things. It's better to be diversified. Do not focus on one asset class alone. FIRE movement, I think that's great for most people who are inspired by it, but I think too many of us are enamored with the idea of retiring young with a lot of money. You'll get bored. Sorry, that's my real answer. If you want to start saving for your retirement, but also you recently had big debt on your credit card, how do you manage? Is it wise to invest where you still have debt to settle? Pay your debts first, especially if it's a credit card. It doesn't make sense to pay at least 24% on a credit card debt and find it really hard to make 8% on your investment. Okay? So sell some of your stuff. If you have a car, sell it, pay off your credit card debt. You can just build up your asset later on. A little sacrifice is needed. Why shouldn't I just invest it in stocks by myself? If you have the capability to read financial statements, monitor the market, cover your risks, get access to real-time data, go ahead. But if you don't, and you have a day job, just buy an index fund or some other fund that you're comfortable with. International stocks advisable, sure, if you have the capital, if you can also monitor the market that way. You'll have to wake up at 2 a.m. just like me. I have millions in equity fund na matagal ng negative. Hindi ko ma-redeem kasi ngayon almost 25% negative. Ano gagawin ko doon? Redeem na din ba kasi ang tagal ng negative? Di nag-positive ever. I am already retired. Question, how old are you? Are you near 85? Are you near 70? It depends. When you invest, you need to have a purpose attached to the investment. Some of you who may be losing, but still have 20 years before retirement, and your purpose is retirement. So the retirement phase has not arrived yet. You don't need the money yet. So just keep investing while the market is low. But hopefully you're not paying too much in fees, no? I think I answered Pera. Somebody said, what do you think about relying on high valued time deposits as sole means of investment? You know, maximize it now while it's available. So it's hard to say you should diversify into risky assets because we don't know how low the market can go. So it's okay. Being in cash is also a strategy. Which is better investment, mutual fund or UITF? Wherever it is convenient and wherever you have confidence in the company that's offering those types of investments to you. Condotel, good investment on a real estate depends on your purpose. So if you're the type of person who requires the services additional to having a condotel or who your market is, that's what you use to decide whether it's a condotel or real estate for you. It really depends on your purpose. Do you recommend life insurance even though I don't have dependents? No. Investments can come first. Is this the near bottom of the PSEI? I have no idea, and I will not pretend to know. Actually, when you study the great investors of the world, they always say they have no idea where the market will go next. Would you advise getting an insurance for my child? Definitely not. Your child is not the breadwinner. Insurance is protection. You need protection. Your child, no. Is insurance payment part of savings or expenses in doing our monthly budget? If it's term insurance, it's part of your expenses. Could you conduct someday a free webinar about estate planning? I am not a lawyer and I am not a CPA. So in estate planning, I defer to the experts. What is your advice for one who is in 50s employed with 50,000 salary, almost all spent on needs, has savings of 3 million? How should it be invested? If you're 50 already, maximize the time deposits at 6%. And then maybe put some in, because the market is low now. I think it's time to buy some good value stocks or mutual funds for your long term. Kasi 50, 85 pa, if your time horizon is 85, it's still 35 years. Yay! Been paying for VUL for 20 years. Now age 50, what should I do with it? That's tough. Wait for the market to go up a bit, maybe, so that you're not losing so much. 20 years, I don't know where the market was in, medyo mataas yung market 20 years ago. So you're probably losing now. I'm sorry about that. Pag-ibig MP2, good instrument for retirement? Yes. It has minimum 5 years, huh? And the dividends are not guaranteed. So it could go low, it could go high. Woohoo! I think that's all the time we have. We answered this live. Anybody? I know that there are a lot more questions in the chat. I don't know how to handle this. Can Eloisa? Do we move forward or should we end the session? Okay, answer the question. All right. Okay, so I know that some of you have a lot more questions and I'm not able to answer, even though I've been trying to speak so fast. I'm sorry that we could not answer all of your questions. Maybe you can send them to FAMI. Yes, nakaka-healthy po ng brain cells. Makinig kay Miss Salve. Hindi ba umikot yung utak niya? Thank you so much. Thank you so much for being here. I hope you learned a lot. Some of you are not happy that we're not able to answer everybody, but that's the time that we have. Maybe you can join the next one. There is another one, I believe. Maybe we can answer more in the next session. Bitin daw. Okay. Thank you, everyone. You can get in touch with Bel Pajarillo if you have more questions. Their numbers are on the screen. So, guys, let me just end with this. I said earlier, behavior modification should be sustained. I see a lot of people who join my sessions, but it's just information flow. There should be action flow as well. Every year that we delay, I know the markets are down now. I know that there are a lot of people crying because, as we could see, and I'm not saying I belittle your feelings, that is the nature of the markets. But because of the risk of investing in markets, we are also compensated for these risks. We just need time. That's why a long-term investment horizon is very important. But of course, invest intelligently. Know what you're putting your money into. Don't just sign on the dotted line because the person selling them to you is somebody you know. And always stay tuned to more FAMI webinars. If you're bitten, we can have another one. Thank you, everyone. Stay safe, be happy, and be inspired all the time. Bye.
When was the last time you did something for the first time? You remember that feeling of hesitation. Maybe you're not ready. Perhaps you're not good enough. You doubt yourself. It's a long road ahead. And right now you think, safe is a good place to be. You take a step back, but in doing so, you see the whole picture. You remember the stakes you were brave enough to take. So you shout at the unknown no longer, because you are your own master. You rise up, because you know you're not alone. Because you stand on the shoulders of the ones before you. And through them you realize you are more afraid of not trying than failing. They hold your hand, lead you to the peak of your potential. And once on top, you take the leap and do it. The first time you flew and tasted freedom. The first time you went the extra mile and never looked back. The first time you understood that something so small could change the course of your future. The first time you put yourself first. At First Metro Asset, we value you and your achievements. As we navigate through this better normal together, we are here to help you cherish your firsts and make those moments last. When was the last time you did something for the first time? You remember that feeling of hesitation. Maybe you're not ready. Perhaps you're not good enough. You doubt yourself. It's a long road ahead. And right now you think, safe is a good place to be. You take a step back, but in doing so, you see the whole picture. You remember the stakes you were brave enough to take. So you shout at the unknown no longer, because you are your own master. You rise up, because you know you're not alone. Because you stand on the shoulders of the ones before you. And through them you realize you are more afraid of not trying than failing. They hold your hand, lead you to the peak of your potential. And once on top, you take the leap and do it. The first time you flew and tasted freedom. The first time you went the extra mile and never looked back. The first time you understood that something so small could change the course of your future. The first time you put yourself first. At First Metro Asset, we value you and your achievements. As we navigate through this better normal together, we are here to help you cherish your firsts and make those moments last.